guys? Welcome back to MMGinvest. Today's a very volatile day in the markets. Can you guys hear me? Anyone hear me? Let me know if you guys could hear me, because I can't seem to find my live stream. It says live. Alright, here we go.
As a real estate agent, I've learned it's excess moisture that causes musty odors. Pro tip, use damp rid.
Alright. So, yesterday the trade war news all of a sudden turned around because everyone's been talking about a recession and it's starting to actually scare people a little bit, right? And they need to get the markets back up and they need to get sentiment up and running for Christmas, right? For the big shopping holiday season. The U.S., it's a consumer nation, and if people don't go out buy big screen TVs in the next 3 months, well, the recession, it's going to happen in 2020. Now, either way, it's going to happen anyways, eventually. But they'll do whatever they can. So today, the S&P 500. First of all, this isn't financial advice. Consult your financial advisor. I'm not your financial advisor. I could be wrong. Have your emotions out. Stops in place. And stocks, they're all risky, extremely volatile. All right. So the S&P exploded up today. On the open, it gapped up. It's almost at 3,000, and it's probably going to make new all-time highs just from looking at this price breakout. And it's because of the trade war. Now, gold and silver, literally crashed. And I anticipated this in the private group. I've been posting. And I think in my last video, I said we're due for a pullback or a dip. And I was saying it was going to hit 1,500. And it literally almost did that today. It's still at 1,520. But it's fallen from, yesterday, right? The price hit 1,566 on gold. And now it's at 1,520. Now, is this it? Is this the dip? I hope not. I actually want the price to fall all the way back to at least a 38.2 fib retracement, which would take you to 1466 or even the 50. Now, the banks are going to smash this when they get the perfect opportunity, and today is that perfect opportunity. Although the bullish trend is still intact, and we're going to see. Now, here's the thing. You have to strategize, right? And next week, so until the 17th, today is the 5th, so we have 2.5 weeks before the next FOMC meeting, right? Next Fed minutes, where they come out and they're going to have to lower interest rates. And the market is expecting at least a 50 point basis point rate cut, right? Now, gold and silver, it's been running up like crazy for the past month or two, right? So a pullback in a correction, it's normal. This is nothing out of the norm. It's normal. And if anything, this is a great buying opportunity. So this is going to drop, right? Either 1,500 holds it up or 1466, that area, or 1435, that area. I don't think, this dump, I don't think it's ever going to go back below 1,400. I am very certain of that. So somewhere down here is going to be your buying opportunity. It's either going to be 1500, which by the end of today the price of gold could be at 1500, or it's going to be lower. I think they're going to smash it a little bit lower. Not just that, we're going to have all next week of possibly the stock market going higher and higher and making new all-time highs. And, they're going to FOMO in. People are going to jump out of metals. They're going to panic again because the last bear market, it's shaking out people and they can't handle it emotionally, the drawdowns and the pullbacks. I'm hoping for a decent pullback because I want people to get scared out of precious metals and to sell their stocks, and then I'm going to buy some more mining stocks on this pullback. Now, that's strategy. You can't go all in every time, although I'm pretty heavy in the mining stocks. But I do trade 20% of my portfolio, and then I always have cash coming in, right, from businesses. So I look at it as a buying opportunity. And I hedge with inverse ETFs for these dumps. And I've told you guys I do that. Now, I'm not selling any of my mining stocks that I've bought, all the way back here, down here. I'm still in the positive. I don't, even if it falls down to $1,400, I'm still in the positive because I bought way back here. So it all depends on when you bought that you're going to start seeing a drawdown, right? Which is your account goes negative. So then, a lot of people are going to get shaken out on this pullback. And then I'm going to load up some more. And then it's really a great opportunity, this pullback and this drop. So I'm hoping for at least 1450, 66, 1470 around there on gold. Silver also is dumping hard. And I've been warning you guys in the chat groups, right? The links below this video. That my indicators literally timed it to the day into the 4-hour time frame chart that this pullback was coming. And I warned you guys in the last video too that we're going to get a pullback. So no one should get caught off guard, right? Now, if you're just if you don't trade, you just buy and hold, or you dollar cost average in. I mean, this is the part of, trading and investing. You get the pullbacks. If you can't handle it emotionally, don't invest. It's not for everyone. So, yeah, I mean, this is great. I didn't want it to just keep running and running higher and higher because I want to accumulate more and more. Because the end game is 20. It's not going to be in 2020, but it's going to play out in the next few years. But in 2020, I'm certain these prices, silver will be above $20, way above. And gold will be hitting all-time highs in 2020 at some time. So this is probably your last big pullback or dip to take advantage of, to load up on stocks and physical. I am actually going to start buying more physical on this one and more stocks. I'm going to just keep doing that. But yeah. You guys could ask questions. I'll look at them. So here's the fib retracements. Now there was a lot of buying going on around 1500 gold and from 1500 to like 1515. So if that support breaks, then the next major support is literally around. I would say the 38.2 fib, which is around 4,460, all the way down to 1,440, around that area. I'm actually hoping it does pull back all the way down there, because that'll give me a great buying opportunity. And let's take a look at the gold and silver ETFs. They're getting hit pretty hard. They're not falling that much, but they're still keeping their channel, right? So let me give you an example. This is GDX, one of the most common ETFs. I don't hold any of it, but it's just like the most known. I'm just giving you guys an example. It's pretty much in this channel. And most of the ETFs are literally in a channel. So if gold could break under 1500, that's when these ETFs will break out of the channel and fall in a big way. And then all of your gold mining stocks across the board will fall pretty. They'll get a pretty big hit, which would be great for another buying opportunity. So nothing goes up in a straight line, guys. The trade talks, who knows? It's like they're constantly recycling them. What is this? Hold on. I posted this meme. It's hilarious. Like, this is literally the cycle, right? Futures drop as trade tensions escalate. Stock futures slip as trade tensions weigh. No progress is made. Administration is tough on trade with China. Markets sell off. Trade war fears. Administration hints at resolution. Market rallies temporarily on news. And then the cycle repeats. It's pretty much what's happening right now. Nothing new. So the yield curve is also it's not as steep anymore. It's not inverted as much. So that doesn't mean that the economy is going to be booming or anything. Nothing's really changed. It's just a temporary manipulation to get the markets back up. See, look at this. The 10-year treasury is popping right now. It's at 1.58. The dollar dumped hard. See, look at this. So metals dumped, and so did the dollar. This is just temporary, guys. They're just trying to get the market up for to end this year, or at least get the psychology of consumers to go out and shop for the rest of this year, because I guarantee you companies are starting to feel it and revenues are dropping. Economic data has been coming out, the worst manufacturing in 10 years. And like I said, mainstream media has been talking about a recession for the past few weeks now, and I feel like because of the psychological talking on mainstream media about a possible recession, it's starting to scare, all the people who are holding not pensions, but who are holding their retirement in the stock market. So, and maybe they're cutting back on spending. And, they see that with economic data, so they're like, all right, we need to do something. So we'll make up some sort of fake alliance with China temporarily. Trade talks are going great. We're going to cut rates. We're not going to have a hard recession, we're not going to have a recession. Get psychologically everyone back on the gravy train of everything's going to be okay, But it's not, because of the debt. The debt is so huge. There's nothing they could do to stop the stock market from falling again and going into a recession. It's going to happen. It's not if, but when. And I really don't see this going much longer. By the end of 2020, there's going to be a serious crash in the markets and a recession. They just can't keep this going much longer, guys. And even if they can keep the markets higher and there isn't a recession, the only way that they're going to be able to do it is by lowering interest rates to zero or negative and printing money like, like it's growing on trees. It's going to be helicopter money, guys. So metals are going to go back up. Don't worry. On this pullback, I'm going to take pretty much all my money and buy metals and mining stocks. And I just keep doing that. But I do have monthly, revenue. I have income myself from business. So I just keep buying on these pullbacks and dips. And it's great. I love them. What else did I want to show you guys? It's pretty much all I really have for right now. There's a bunch of stocks you could buy right now that are just, going up and breaking out. I bought an index. I don't like buying individual stocks. Sometimes I do. It's just that they're more risky because you really have to pay attention to the news, the revenue, earnings reports, and all kinds of crap. All right, let's see what you guys are saying. Oh, you lost 2,600. I mean, my stocks I lost way more than that. But it's just a temporary. It's a paper loss, right? You're in it for the long haul. You're not buying mining stocks to hold for a couple weeks or a month even. If you're deciding to buy mining stocks, you're planning on holding these for 3 years or something like that. You're in it for the long haul. I didn't lose any money today because I hedge with inverse ETFs. There's ways to hedge against a drop in prices, and I posted that in the private group, and it's working out pretty well right now. I should go higher though. Here's a moon boy. BTC will moon on crash. No more tether drama. You perma bear. And you're banned. All right, so Bitcoin's gonna crash eventually. By the way, Bitcoin's falling right now. It's not doing. The Bitcoin has no correlation with the stock market or even gold and silver metals prices. It's in its own world with manipulation. By the way, there's crypto whale pool tether pumpers who watch me now. I know things. I know all the people who are in my Telegram chats and who watch me. There's ways of finding out who watches you and everything they do. Where you see the dip in silver? What? Revised GDP numbers. Yeah, you know what's funny? The markets, they just ignore revised GDP numbers. They ignore the revised jobs created in the past year because they missed it by 500,000, 500,000, which is a big deal. So in reality, it's probably 1 million. And most of those jobs are service sector jobs because manufacturing is just declining. So, the stock market's in its own Listen, guys, the stock market is literally like Bitcoin 2017. People are complacent. They just think the damn thing's gonna go up forever. This time's different. It's okay. The Fed has our back. They'll keep printing money, and the stock market will go up forever. And that's literally what they think at this point because of the manipulation by the stock market. Not the stock market. I mean the Fed. Listen, the stock market can go up by a lot. It could go up into a blow off top. And that's because they just keep printing money at the Fed, right? And have negative rates. And, Venezuela's stock market did that too. Until inflation destroyed all the companies. And then no one could ignore that, right? And then everything starts blowing up because of all the debt. And then eventually the higher it goes, the bigger the fall. I'm reading your questions. That's why I'm quiet. I try to avoid the dead space. There's always a big rally after the yield curve inverts. History don't lie. Yeah. So the yield curve inverts, and then the market usually dumps like 6 to 18 months later. So, there's a delay, and maybe people, know that. And, historically it does do that, so people are counting on that. Here's the thing. I personally, I wouldn't chase the last 10 to 20%. But here's the thing. Your retail investor doesn't know that. Your hedge funds and all the smart money, everyone who's trading, the speculators on the stock market, they know that. So they'll chase the last 5, 10, 15%. But your average retail investor is just kind of like doesn't know what's going on. They by the time they decide to do something, it's already too late. Especially if you're trading your retirement fund, right? Where do I think silver and gold prices will be by the end of the year? This year? I don't know. They could still hit all-time highs by the end of the year. It all depends on how much they cut interest rates and if there's a black swan event. I do need to talk about the fact if gold and silver and mining stocks will crash if the stock market crashes, because historically that does happen. I'm gonna make a separate video on that because it's really important. I don't want to talk about it right now in this live. I want to prepare for it. You know what I mean? If Fed, okay, I think SPY will take out previous high and then suddenly crash to 200-ish. I mean, the SPY is going to do whatever the other indexes do. What the S&P, Dow, and NASDAQ does. Which SPY are you talking about? There's a lot of them. 200? SQQ? Or no, the QQQ? If Fed lowers rates, metals should pump. If they keep rates the same, markets dump, metals will pump. Metals are going to go back up either way. It doesn't matter because you guys don't understand. They have to keep lowering rates. If they raise rates or just keep them the same, the market's going to react by dumping. And it's just right now for the next 2 weeks, I see the stock market rallying. And nobody believes in the gold and silver rally because, I don't know, this is just how things are. It's like psychologically, people don't like gold and silver. They don't like investing in it. They've been taught all their lives not to buy it because it doesn't yield, right? It's not a yielding asset. I mean, some of the stocks have yield or dividends, but it doesn't matter. I mean, metals have outperformed the S&P and all that anyways. And later on, dividends aren't going to matter if the principal of your stock is going to fall so much and inflation outpaces the dividend. And they don't understand that. Inflation's already higher than anyone thinks, and it probably takes a huge chunk out of your dividend gains, and then you have to pay taxes on those as well. So that's why eventually everyone's going to have to go to metal. Like, there's going to be nowhere to run or hide. What do you think? Okay, it's starting to move now, the chat. Would this plan work? Buy miners and hedge by shorting silver each time a pullback looks likely? Yeah, it could work. It's just, if you screw up, it's gonna be painful. Although if you place stops, if you know how to manage risk and place stops, you'll be fine. I mean, that's what I do. I'm really risk. I take more risk. So the leveraged ETFs, like, when I trade those, you should be trading the ones that are not leveraged. If you don't have literally 6 to 10 years experience. Because if you screw up, you're gonna lose a lot, and you could just don't trade leverage ETFs, guys. So whenever I post in the private group that I'm buying a leveraged ETF, you should just be buying a ETF that's not leveraged. Or just just an index. What do you think will happen to the price of gold and silver if Trump get reelected? If Trump gets reelected, they're already doing QE, which is like helicopter money printing. That's the only way Trump's going to get reelected. So metals will go up. If Trump doesn't get reelected, stock market will crash, and metals are going to go up because they're going to. If you guys think Trump's going to print a lot of money, if a lefty gets into office and they try all their free handouts and welfare and socialism and modern monetary theory, it's Venezuela. Like, hyperinflation's coming. So metals could go to the moon, literally. I don't want that to happen, though. I don't want to see $100,000 an ounce gold, because that means it's like Mad Max out in the streets. Although Mad Max scenario would probably be the best long term for Americans, because if a Mad Max scenario happens, all the corrupt people are just, maybe, I don't want to say certain words on, you know what I mean? But nobody wants that. It's going to be very hard times. If Fed lowers rates, metal should... Okay, let me... Do I think prices are driven by algorithms rather than retail traders? Both. It's both. I mean, a lot of the market is algorithms. But there's a decent amount of volume just from retail. And retail, it's unfortunate, but retail investors literally could time the algorithms. That's why algorithms, they work for a while, but then they don't work after a while, because human beings, they catch on to the algorithms. Because all the algorithms end up doing the same thing, because they catch on each other. It gets complicated, but here's the thing, guys. There is the one algorithm that is very noticeable is the plunge protection team. But here's the thing with algorithms. They could also cause major crashes. Because if all the algorithms flip to sell, you could have a systemic, like flash crash. And we've seen those in the past as well. So, yeah. Because eventually all the algorithms will either hit buy, buy the dip, buy the dip, buy the dip, and then once like major moving averages cross and some serious bad news comes out and retail investors start selling, then all the algos start selling all at once, and that's why you see huge volatility and sell-offs. And then the VIX like shoots up massively. Like recently there was a huge spike this year all the way up to 36 on the VIX for the S&P 500. Well, here's the thing. This is why algorithms kind of control the market, and it's because they buy these index funds. They don't buy stocks, individual stocks. Retail investors buy more retail stocks, and they trade ETFs. But the algos, because they move so much money for these huge hedge funds and institutions and banks and whatnot, they buy the indexes. And the indexes are baskets, huge baskets of like thousands of stocks, hundreds of stocks, right? Or maybe 50 stocks to 100 stocks. And the algos move the indexes, which kind of controls the ETFs and then controls the underlying stocks themselves. The market shouldn't be like that. A free market does not trade like that. Although trends are your friends, right? So it's really easy trading.